Okay. Good win. Notre Dame. Don't even. Let's talk about stock. Yeah, I owe you dinner. You guys are big, fast, strong, and disciplined. Congratulations to the Fighting Irish.
And 6-0.
And ranked 5th, not 4th.
Yes.
You need one more step. I'm pulling for you now, Jeff, because I love you, buddy. Thank you for congrats again. Now let's get back to the markets here. You heard Dom's piece. Do you think the structural changes of the market are, in one thing, a reason to find that these tech stocks have not done well?
Well, I think it's interesting. So you look at the tech stocks domestically, the U.S. tech stocks are still very strong. You look at the tech stocks over in China, we're seeing that bifurcation. So right now, I don't think I'm overly concerned about the U.S. tech sector, even though there is some selling pressure in these FANG stocks. But look, Sully, we're only 2% off the S&P 500 all-time highs. Therefore, I still think you're seeing global assets being attracted into our stock market, despite the fact we are seeing these surging yields in the 10-year note.
When I talk about bonds, exactly, that yields, I like to talk to Chicago people, no offense to New York people, because you guys kind of are the bond capital, if you will. The folks I talk to in Chicago say, Brian, rates are rising less because of our Fed and inflation, and more probably because the Chinese are selling them to either punish us and or raise capital. What do you think?
Well, that is the rumor. That is not a verified rumor as of yet, but I spent over a decade trading 10-year notes in the pits in Chicago, as you know, Sully. And the one takeaway I think is really important for investors is understand the velocity. Similar to Notre Dame's running back, Dexter Williams, that velocity he had Saturday night, Sully, it's all about the velocity in the 10-year note. We saw over 20 basis point move last week. That's overwhelming. And when you see that type of move, and if we see follow through above 3.25%, that's going to take the breath away in this U.S. equity rally. But I think there's a lot of cushion in that U.S. equity rally. Look at the stock market. It's been above 2,900 in the S&P 500 for quite some time, so we can pull back another 2 or 3% before anyone really rings an alarm.
Okay there, Mr. 10-year bond trader slash running back coach for Notre Dame. Do you think that the move we saw in rates could be only related to inflationary fears? It seems that velocity you speak of couldn't have come just from that.
I think that's one piece of the puzzle, but think about the U.S. 10-year market. It's been coiled for quite some time. Everyone's been looking for this move above 3% for many, many years, Sully, but now we finally have it. So I think this week is critical. And I know it's a little boring to talk about U.S. Treasury auctions, but there's a big auction this week, and we'll see the appetite. Certainly the short end of the curve, the 2-year, the 5-year note, is going to be very advantageous. Look at those yields, about 2.90%. But the long end of the curve, that's where the Fed's in a bit of a conundrum. If we don't see some buyers out there, you could see that 3.5% in the 10-year. If that happens inside of 5 or 10 trading sessions, you're going to see a big reaction in U.S. equities and global equities as well.
Where am I taking you to dinner?
Oh, we're going somewhere nice, Sully. My friends over at the Boca Group, we'll be going to one of their restaurants, probably Girl and the Goat.
Oh, I love Boca. Lincoln Park, fantastic. Done.
Boom.
Sold. We both win.